We got connected it was a couple years ago, and I don't remember the exact moment. I mean, there's all these networking events. I'm sure we bumped into each other then, or at one of those. You're a real estate agent, you're entrepreneur, own some boutique, really, really wonderful coffee shops. And then you're getting into multifamily investing.
That's right.
And I've kind of watched you over the past, I guess, I don't know if it's 2 years or so, and it's been fun. So, but you're not just investing in Houston, are you?
We're looking in a variety of markets. So I have ownership interest in an asset here in Houston, also one in Columbus, Ohio with a partnership. And then we are also looking in Tennessee and Kansas City, as well as San Antonio, which I guess you can say is, it's not out of state, but it's out of city because we're not there in San Antonio.
Correct. I mean, it's not like you can, I mean, it's 3.5 hours away, but It's not like you can just 10 minutes away, you can go fix a problem, nor would you on a multifamily unit,
No.
But the fundamentals are still the same. How are you successfully investing in, say, Kansas City, or you said Ohio, right? Like the out-of-state properties that you have, how are you approaching, like, hey, this is the market I want to go in, and this is how I'm going to acquire it. This is how I'm going to manage it. How are you approaching that?
Sure. That's a great question, Chris. And I think it's really important for everybody to understand that when you're going into a market, you have to understand the market fundamentals first. Before you call the agent, before you call your property manager, before you call your lender, before you find somebody who's maybe a potential partner, I think you really want to understand the economics of, what's driving the economy in that area. Because you and I both know, Chris, somebody could send you a deal in your inbox and you're looking at it and it's like, oh, it's $50K. That's amazing. Well, there's probably a reason it's $50K. I always say you get what you pay for, right? So you got to really understand the market drivers and the fundamentals before you go invest somewhere. There are questions you want to ask yourself, such as, is this a landlord-friendly state or city, right? If I'm going to have a problem with a tenant I have, whether I own a 200-unit apartment complex or I'm just buying a single-family house, you want to make sure you understand the laws and the rules there. You also want to understand things like population growth and job growth in that market. You want to make sure that you have to always begin with the end in mind. So even if you're a buy and hold investor and you plan on holding a property for 10, 20, 30 years, you have to really think about your exit at the end of the day. And the question you have to ask yourself is this going to be an attractive asset? Again, whether it's single family or a big apartment complex, when I decide to sell, if the market doesn't have great fundamentals, if it doesn't have the economic drivers that you want to see, it might not have a lot of buyers, which means you might buy it really cheap, but you also might have to sell it really cheap. So there's a lot of questions you definitely want to make sure you ask. So those are sort of where we start. And then after that, just to kind of piggyback on what Sarah just said, we really emphasize on building a strong team before we go knocking on doors, so to speak.
Yeah, going back to that $50,000 property, and the value is subjective. So today in Detroit, maybe you can get a good deal. And I don't know anything about Detroit today, but I remember back in like 2011, like you couldn't even give properties away.
Yeah,
it was like 10,000. Like
sure.
And it was in some otherwise, I guess, okay areas that had just been. I mean, they were ghost towns. So knowing the fundamentals of your market, but population growth. So as you've explored some of these markets, for folks that are considering investing out of state, if you're in California, prices are probably quite a bit higher than some other markets. Same thing with New York. They're definitely higher.
Sure.
What markets are you seeing as attractive for the landlord or the passive type of investor that's looking to invest out of state?
Sure. That's a great question. I mean, there's a lot of landlord-friendly states. You can literally go on Google and type in landlord-friendly states, and there'll be like a Google image, and they're kind of color-coded, so that makes it nice and easy.
But Texas will be one of the big shining ones on there, right?
Yeah, that's what I was about to say. But the big obvious ones that are the elephant in the room, Texas is obviously a phenomenal state. We have I wouldn't call it easy, but our processes for eviction are not that complicated. 30 days or less, give or take. There's a lot of other landlord-friendly states. Most of them kind of reside in the Southeast. You're looking at your Tennessees, you're looking at your Carolinas. Oklahoma City is getting pretty popular from a real estate investing market. Kansas City is another one. Usually, just kind of the rule of thumb, and it's not stuck, but the East Coast and the West Coast, especially the farther north you get, those are going to be not landlord-friendly. So the states like you mentioned, California and New York, those are the ones that you definitely want to be careful. It doesn't mean you can't find investment opportunities there, but you definitely got to know what you're getting into.
Yeah, the fundamentals are going to be a lot more different if you're buying in Boston
Sure.
or New York than Atlanta,
Hmm.
Tampa,
Yep.
Houston.
Yep.
um, the management aspect is definitely probably the number one. Like once you get a deal, and so getting a deal out of state's not that difficult. You can
Sure.
rely on boots on the ground, especially if you're working with brokers and agents that know what they're doing and have experience finding a good deal, analyzing a good one out of state. That part actually, at least to me, seems like it's the easiest portion. It's the management portion that can take your asset and make it worse
Sure.
or make it really, really rewarding for you and lucrative over time. How are you solving that problem whenever you're
Yeah,
hundreds of miles away from your market?
absolutely. Property management is so important. And Sarah was just talking about it, but we are not ones to self-manage, especially in the size of assets that we're looking at, typically 60, 70 doors on the small side. But even if you're looking at single family houses or you're looking at small multifamilies, I would encourage everybody who's listening to find themselves a really, really good property manager. The term that we use in our industry in multifamily and specifically is somebody that's boots on the ground. So whether that's somebody who's going to be a partner with you who can then network and find that local property manager, or you can just find that property manager that has an established footprint there. And you want to ask really smart questions. You want to make sure that you're vetting them. How long have they been there? How many units do they manage? You want to make sure that if you're buying small multifamily, that the operator, the property manager, can actually handle those small multifamily, because there's a lot of single family property managers that do an awesome job in the single family space, and they think their model is scalable and transferable. So yeah, we'll manage your 8 unit, we'll manage your 10 unit. And what you'll find is that it's very different. It sounds the same, like, oh, what's 1 to 5, 1 to 6? What's the big deal? It's very, very different. When you go above 4 units and you're in that 5 space, now you're in a commercial type transaction, and everything is NOI based, right? You're valuing these assets based on cap rate. So that's a different conversation that property managers aren't used to having. So asking those types of questions, depending on what you're buying, is really important. And you want to make sure you do your due diligence on these property managers, because at the end of the day, you just hit the nail on the head, Chris. You can buy a great deal. It can look great on paper. The numbers could work really well. But if you put a bad property manager on that property, it can kill the deal. And it's kind of the other way around too. You can buy a deal that's maybe, looks a little thin. It's still a good deal, but maybe it's a little thin. And they can exponentially grow that property and really make it a really attractive asset, so that when you're refinancing, or if you're finally, exiting, you can really capture that value on the back end.
And at least from the multifamily commercial space, it seems like that's the biggest game right now. Not so much the huge uplifts, although those opportunities, they're always going to be there, but is finding the property that it is a good asset,
Mm-hmm.
well run, actually has good numbers, but there's some opportunity there that the owner, for whatever reason, maybe they've capped out. They're not going to put the extra capital expenditures in that's going to take it from or take it to the next level, and they're leaving that opportunity for the next owner to bring their unique perspective, their plan of action that's going to take it from I don't know, 500,000 NOI to 625, which
Sure.
exponentially grows the valuation.
Yep.
And especially if you do that over a 3 or 5 year period, that good deal today is an even better deal 5 years from now.
Absolutely. And you want to find property managers that not only understand what you just said, but we try to find one that are very open to. You could have a whole another panel on this, leveraging technology, right? This industry is starting to change, especially on the property management side. And I think tenants in particular are starting to look for what we call resort style amenities. So even if you're, even if you have a duplex or a fourplex or a 10 unit, do you have smart technology in the home? Are you offering Wi-Fi? Are there Nest thermostats? What's the quality of customer service that you're really offering? And you want to make sure you align with a property manager that's not just fixing toilets and collecting checks. A lot of people can do that, right?
Quick comment there, and then we got to wrap it up. This thing's move quick, but I've noticed that like the whole selling as is, especially on the single family, wholetailing, as it's commonly called. I've noticed that depending on the area, and you can still get really good prices on those, but if you're wholetailing to the retail buyer, we actually found, now this is pre-COVID, less desire over the years. And I was like, why is that? Like, these are good opportunities for them. It's because they're coming from a Class A apartment complex.
That's right.
Going from a Class A, like painting a house, like who wants to do that? Who wants to change carpet? Who wants to like swap out appliances for a little sweat equity? So, but yeah, good comment. So it's about the service, about the experience.